Hello and welcome, everyone. My name is Caitlin Hung with Avalara. Thanks so much for attending Avalara Activate, Key Considerations for Marketplace Sellers. We're so thankful you can spend a portion of your day with us virtually and have a great presentation for you on the latest findings and guidance regarding navigating tax compliance for marketplace sellers. Following that, we have 2 breakout sessions for you to choose from and a quick 15-minute speed trivia where you can network with other Avalara customers and meet your account managers. Before we dive in, I want to quickly introduce the Avalara team here. I'm in great company with my co-hosts, Monica and Cheryl, account managers at Avalara. They have a few words of welcome before I jump into some housekeeping, so I'm going to let them take it away.
Thanks, Caitlin. Hi, everyone. Great to meet you all. My name is Monica. As Caitlin said, I am one of our account managers for our customers here at Avalara, along with Cheryl. Events are one of our favorites to meet with customers. And while we can't shake hands, we're all here to support you and can't wait to get back to meeting you all and networking in person.
We're all here behind the scenes wearing orange and answering questions. So if you have any questions for me or just want to say hello, feel free to do so via the Q&A widget. We'll also be leading the breakout sessions and speed trivia networking session for the last 15 minutes via Zoom. Come meet other sales tax professionals and test your sales tax trivia knowledge. We'd love to meet you face to face. Back to you, Caitlin.
Thanks, everyone. I'm going to quickly cover the console that you're looking at and a few housekeeping items. First, we are recording today's keynote presentation, so if you want to listen to it again or share it with a colleague, you'll receive this recording in 24 hours. Next, the console that you're looking at can be customized, so feel free to move or resize any of those windows. Along the bottom of the screen, you'll see several buttons or widgets. I'm not going to cover all of them, but I do want to highlight a few. The first one is the purple Q&A icon. So this window should already be to the right of your slides window. Use this box to submit any and all questions you may have. The Avalara team will answer the ones that we can individually, but we also have a live Q&A at the end of the presentation, so stay tuned for that. The second thing is the green resources icon. This is where you can download today's presentation slides and access other relevant resources. The console will disappear at the end of the presentation, so if there are any that you would like to check out, go ahead and click on them now. They'll open up in a new tab and be waiting for you when the presentation is over. The white icon with an orange check mark is for your CPE certificates. There's a window to the bottom right of your screen. To earn the CPE credit, you must be in attendance for the entirety of the 50-minute presentation. To ensure you're still there, a check-in will pop up randomly during the keynote presentation. Just click that you're still watching and your CPE certificate will be available to download. Contact your account manager. In the top right-hand corner, you'll see the option to contact your account manager. We got a lot of requests for this widget. If you have an account-specific question or want to talk to your account manager about how this presentation best applies to your business, fill out the form, click send, and we will connect you to your account manager. Group chat. The button down at the bottom with the little chat bubbles is for our group chat. We know that networking is a huge reason why you attend our in-person events. So we encourage you to introduce yourself, drop your name, company, and LinkedIn profile so everyone can get connected. If you have any technical issues, there's a yellow help button at the bottom of your screen. You can get answers to frequently asked questions there. Last but not least, we're doing something very special this month. Avalara is partnering with G2 Gives to support the American Nurses Foundation. For every review, G2 is donating $10 to the American Nurses Foundation with the goal of Avalara raising $600 in funds to invest in the well-being and success of individual nurses while championing the cause of nursing throughout the healthcare system. It takes about 7 minutes to leave a review. They'll donate $10 to the American Nurses Foundation, and you'll receive a $50 Amazon gift card. The link to do so is right underneath the slides window. All right, that's enough for me. Next, I'd like to introduce our keynote speaker. We're so lucky to have Darcy with us here today. She hails from Armanino, one of the top 25 largest independent accounting and business consulting firms in the United States, and works across the lake from Avalara. She has nearly 30 years of state and local tax experience with an emphasis on sales and use tax issues. She began her career as an auditor with the Washington Department of Revenue and is now a member of the Washington State Society of CPAs. Darcy, we are so fortunate to have you here. Thanks for joining us.
Caitlin, thank you so much. I'm happy to be here. And hello, everyone. Would love to see you personally, but here we are on a video conference. And we've got a lot to discuss. So here, let's dive into it. The agenda for what I want to cover today is, number one, the history of Amazon's digital marketplace. And I want to go back into the history, number one, because it's really interesting as it relates to the development of sales tax laws, but also it helps explain to how we got to where we are today with sales tax laws on digital marketplace sales. The next thing, Wayfair changes everything. If you're not familiar with the Wayfair case, we'll step through it, what it is, what it did to us. Finally, next, I want to talk about sales tax compliance for sellers, what you as a seller need to know about sales tax compliance, just really stepping through all of the various steps very quickly. Then, the current issues for remote sellers and marketplace facilitators. If you're out there selling through a marketplace, there are some really critical issues that are developing that we'll talk about. And finally, future issues. What's going to happen in the future related to all of this? So let's dive in and advance the slide. There we go. Okay, history of Amazon's digital marketplace. So I'm going to focus here on Amazon. While there are many marketplaces out there, Amazon was really the leader in the amazing development and growth of the global digital market. So remember when Amazon used to just sell books back in the 1990s? Well, Jeff Bezos had the idea that books were commodities and that he could actually make money selling books on this new thing called the internet. And so what he did was bought a bunch of books, put them in a warehouse in Seattle, advertised them on the internet, sold them online to people across the country, and shipped them to those customers. And he was able to make money doing this because, number one, he didn't have storefront overhead expenses. He didn't have retail employees that he needed to pay. And also, very interestingly, on his book sales, he did not need to charge customers sales tax, customers outside of Washington State, because Amazon did not have nexus in those other states where the customers are located. So I'm going to stop right there and define nexus, because this is such a critical term to the entire sales tax regime. So nexus is defined as the key to, or the link between the seller and the taxing jurisdiction where the goods are being delivered to. And this link must be sufficient. If it is sufficient enough, then the taxing jurisdiction, the state, can say, hey, seller, you've got enough presence here in our state that you need to now register and collect sales tax from our customers in the state and remit that sales tax back to us. So it's been a long-standing principle ever since the 1930s when sales taxes began that nexus was based on a physical presence. That would be sufficient for a state to impose a sales tax collection obligation on the seller. And physical presence usually encompasses having an office in a state, or sending in salespeople into the state to call upon customers, even if they're not your own salespeople, maybe independent contractors. Or maybe you've got, you lease a warehouse or space in a warehouse and you put your inventory in that warehouse in the state. Those are all examples of what physical presence is and what the state said, okay, that's enough that you need to charge sales tax. And the rationale behind that is, well, maybe you've got a salesperson driving out to a prospect meeting and that salesperson gets in a crash. Who comes? The local police. How do you fund the local police? With taxes. So that's the logic behind this nexus, is funding the local activities. Okay, so nexus is very important. And Amazon's selling books on the internet, and then they start selling other kinds of stuff too. And they're really good and successful at that. And people liked buying things online. It's kind of fun. My husband calls it getting a prize. Every time a delivery driver pulls up with a brown paper box, oh, we're getting prizes today. So people like getting prizes. And they also like not paying sales tax on their goods. So the common scenario might be somebody walks into their local big box retailer, picks up an item, touches, feels, plays with it, and then goes home, logs in, and buys that same item over the internet because they can buy it cheaper because they're not paying the sales tax if the seller doesn't have Nexus. And this kind of created some problems. Number one, it created problems for the big box retailers that said, hey, wait, come buy from us. But it also created problems for the state saying, whoa, wait, if you'd bought from the big box retailer, we would have got the sales tax. But now that you're buying over the internet and the seller doesn't have Nexus, we're missing the tax and losing billions of dollars of tax revenue. So that was a problem. That was created as internet shopping got more popular. Then what happened is that people started wanting their stuff when they're buying it over the internet even faster. Speed to delivery became the critical factor. And so at that point in time, when people wanted to get their stuff faster, 24-hour shipping, next day shipping, then Amazon said, okay, we've got enough people addicted to this internet shopping that sales tax is not going to be the critical factor for their buying. They want speed of delivery. So Amazon said, okay, we are going to now create Nexus knowingly, willingly in these other states by putting in distribution centers so we can have our goods positioned all over the country and people can get their stuff faster. When Amazon did that, they created Nexus. They started charging sales tax on the goods that they were selling to their customers, and the states were happy. But then Amazon said, we've created this amazing platform out here for selling stuff, and it's working really, really well. So why don't we open this up to other sellers, other merchants? They can utilize our platform to sell their things. And that was great. So the Amazon Marketplace was born. But that created some challenges because now we've got sellers using the Amazon platform to sell their goods and ship them to customers. But these remote sellers still don't have Nexus. They're just using the Amazon website. So the states are saying, we're still missing out on the sales tax from these remote sellers. And it caused all kinds of problems. Amazon called me about 10 years ago and said, hey, we need somebody to help advise all these remote sellers on their tax liabilities and what they need to do. It's not our problem. We're just facilitating their goods. And so we kind of talked about it, but it was going to be a massive, massive project. And I talked with other people in the firm. We said, yeah, that's kind of too big for just one firm to take on. So the marketplace sellers were kind of left to their own to figure out their sales tax as they were selling through Amazon. Here's an example of what shopping on Amazon looks like. It just kind of wraps up all of those comments where on the first line here, we can see the book, the product is Where the Wild Things Are, is being sold by Amazon for $13.20. Then we have other sellers using the same platform, Books Express and Superbooks. They own their own inventory of this book, but they are using the platform to sell their goods. And so you can see where on the same page we have different sellers advertising in different ways. And it really wraps up Jeff Bezos's initial thought that books are commodities and we can sell them over the internet and have a thriving competition to sell these books. And that's what we're seeing right here, where sellers are competing on speed of delivery and price. Here's a quick graphic just showing the global expansion, or the expansion of Amazon's warehouses. So as they wanted to get their goods closer to the customers, they built all these blue dot distribution facilities across the nation. The yellow dots are where they plan to expand. So you can see that speed to delivery is one of the critical factors. But again, the sellers using just the platform still didn't have nexus in the states where they were shipping their goods to. And so they didn't have nexus, or did they? So when you sign up with Amazon as a seller, you have the option of either, number one, shipping your goods yourself. Maybe you're selling that book and somebody wants to buy it, so you just wrap it up and take it down to the UPS driver and ship it off. Or alternatively, Amazon created another option where Amazon will fulfill your order for you. So you can ship your book to one of Amazon's warehouses, and Amazon will then ship that to the customer themselves. And so it just helps with speed of delivery. So the problem, though, is, well, now you're shipping your goods into somebody else's warehouse. And what did we talk about with Nexus earlier? That physical presence nexus. So Earlier last year, I was scrolling through news articles, and I saw one that just made my jaw drop. Here's what the article says. The headline said, "We'll pay until we die. California wants back taxes from retailers who sold on Amazon." So here's what happened. There's a company called MBW Northwest. They're located in Renton, Washington, just about 10 miles from my house right here. And they were selling home goods as a seller over Amazon's platform. And they opted in to have their goods sent to an Amazon warehouse so that the goods could be shipped off and fulfilled by Amazon. So MBW sent their goods to the Seattle warehouse, Amazon warehouse. And then they got a notice from California saying, hey, you owe California sales tax on the sales you sold into California. This small little mom and pop company said, wait, what are you talking about? We're just selling through Amazon. What happened is the director of California's Department of Tax and Fee Administration came up with an idea and said, you know, people are getting their goods in one day when they're buying from Amazon. That probably means that those goods are already located here in California when they place that order and click the button. So therefore, those sellers most likely have a physical nexus. And that's exactly what happened with MBW Northwest. They had shipped their goods to the Amazon warehouse, presumably in Seattle, but then Amazon, wanting to get those goods closer to the customers, moved MBW's own goods to Amazon's warehouse in California and didn't tell MBW. And so it was kind of a hindsight, like, oh my gosh, MBW has created a physical nexus. They didn't even know that they did. And now California wants tens of thousands of dollars of back sales tax that MBW didn't collect. And hence this Mindy Wright, the owner of this company, was interviewed and said, we just want to do the right thing. We had no idea it's going to bankrupt us. We're going to do the right thing. We're going to pay California, but we'll pay until we die. My jaw dropped. I picked up the phone. I found Mindy's phone number. I called her. I said, Mindy, this is crazy. I saw your article. I live 10 miles away from you. I'm a sales tax geek. I don't know if I can help you. The law is the law, but if I can help you, I'm happy to. We chatted a little bit. She had an attorney, and I think ultimately they settled. But just to wrap up this horror story here, I wanted to conclude with, I came up with a cute little idea. Don't mess with Nexus. And I was out there on the internet trying to find a cute little graphic for the slide here. And what did I come across? I came across an article published by Avalara back in 2013, Don't Mess with Nexus. So Avalara beat me to the punch. And I really want to point out, if you are looking for sales tax information, Avalara's website is a fantastic resource. There are all kinds of articles and information out there on sales tax. I advise you, go take a look out there. You may need to go further and dig into rules and laws and court cases elsewhere, but Avalara's website has a whole host of information to look at. Okay, let's talk about Wayfair. Wayfair changes everything in the continuing saga of and development of Nexus. So here's what happened. If you're not familiar with the Wayfair case, I'm going to boil it down to a few critical factors. Before 2018, we know that state sales tax Nexus was based upon a physical presence. We also know that states were losing their sales tax revenue because people were buying more and more goods over the internet and the sellers were not required to charge sales tax. So the states decided they had to fix this problem. And the way they decided that they were going to fix this problem is they said, hey, South Dakota, why don't you go pass a law that we know is completely against the prior court cases, and you create a law that says that Nexus now also includes a economic nexus test. An economic nexus means that if a seller is selling more than a certain level of goods into a state, then that creates a nexus. They still wanted to protect very, very small sellers, but if you're selling more than $100,000 of goods into the state in a year, or more than 200 transactions, that's sufficient for you, the seller, to be required to collect the sales tax. So they passed this law, then they very strategically went out and started making assessments against internet sellers such as Wayfair and a few others that were selling big ticket items and shipping those to customers in South Dakota. And Wayfair had not collected sales tax. It didn't have a physical nexus in South Dakota previously. And so South Dakota made the assessment knowing that they were going into a big fight, which went all the way up to the United States Supreme Court. And the case was decided on June 21, 2018. We really thought that the case was going to go in favor of Wayfair and uphold physical nexus, but were we wrong? The justices, the Supreme Court justices, during the oral arguments, it was really interesting. They were asking the attorneys for both sides and saying, okay, explain the sales tax compliance to us. South Dakota, you're saying it's very, very easy to for sellers to comply with sales tax and collect and remit the tax. Wayfair, your attorneys are saying it's really, really hard to do. We're confused. Is it easy or is it hard? And ultimately they decided, well, I guess it's kind of easy. And so they allowed the South Dakota law to stand. And so today, after June 21, 2018, we have now both a physical nexus test and an economic test because the states very, very quickly after the Wayfair case was decided started passing laws or by policy adopting this economic nexus test. Most states adopted it effective October 1, 2018. So you can see how quickly the states reacted and had their sales tax party. If you think the government can't get anything done very quickly, that's not the case when they are allowed to start imposing additional sales tax obligations on sellers. They were very, very fast in passing laws. And so now we have across the nation, every state that imposes a sales tax has adopted economic nexus tests. And again, the threshold for establishing economic nexus, $100,000. of sales in a year or 200 transactions. Some states, bigger states, have said, South Dakota has a population of 800,000 people. California, millions. So California, New York, and Texas have economic nexus thresholds of $500,000. So you have to be careful. Each state has a different economic nexus test. Some are starting to drop the 200 transaction count because that's really not a natural business function to count transactions. It gets kind of confusing. So be very wary as you're looking at economic nexus, what the actual rule or threshold is for each particular state that you're selling into. And next. There we go. Okay, so now the sellers with economic nexus are required to charge sales tax if they exceed the threshold. The states were really emboldened by the Wayfair decision. They said, let's take this a step further. It would be great for us. We're now allowed to go out and make this seller on Etsy that sells little thimbles of cacti, have them charge sales tax on their sales. But gee, that's a lot of work for us to go reach out to all these little sellers of goods that are using the internet platform to advertise their goods. It's a whole lot easier to fill our belly with tax dollars if we go after the big fish. And here on this screen, the big fish is Etsy. So the states started passing more laws in 2019 saying, hey, we're going to make this easy for everybody. Let's just have Etsy collect the tax on behalf of the seller of the little cacti instead. So sellers, you're relieved of the responsibility if you're selling through a marketplace facilitator platform. And Etsy, you're already set up. You just collect all the tax for them. Okay, so again, a wave of laws passed across the nation, allowing states to impose the collection responsibility on this third party that is merely just advertising the goods and collecting the money, but now they are also responsible for collecting the sales tax. So Etsy is defined as a marketplace facilitator, which generally means that the marketplace facilitator is doing advertising of someone else's goods, they're taking the orders, and they're processing the payments. Each state, as they adopted marketplace facilitator laws, created a different definition. So you'll want to look at those definitions as you're out there selling to determine if who you're working with truly is a marketplace facilitator. For example, you might work with Shopify. Shopify says that they are not a marketplace facilitator. They're merely processing, but they are not rising to the level of a true marketplace facilitator, so they don't charge sales tax. That's just something I saw on the internet. Fact check that in all states and locations, but that's what I saw generally. So you have to be very careful about who is a marketplace facilitator and required to charge the sales tax on your behalf as a seller. Here's just a quick graphic. I think this is going to show up in one of the breakout sessions later. It shows all these red states here are states that passed marketplace facilitator laws in 2019 or early 2020 this year. We have 3 holdouts, Kansas, Missouri, Florida. They just couldn't get it done. I think COVID had something to do with that, where in 2020, the legislators were in session, just needed to go home and be safe. And so these 3 states couldn't get it done, but there are bills out there. So I would expect in 2021 that these following 3 states will be added on. Do note that the gray states are the 5 states that do not impose a statewide sales tax. So that's always good to know as well. Okay, sales tax compliance for sellers. If you're selling goods or services, here's just generally the steps that you need to go through in order to get yourself in compliance. Again, the buyer to pay, seller to collect. Caitlin said earlier, I started my career as an auditor for the state of Washington, and that was the mantra. The buyer must pay the sales tax, the seller must collect the sales tax. What I didn't put on the slide here is that if either party did not pay the tax, the state can impose the tax on either party. And it's a whole lot easier to go after the big fish, the seller, than the buyer. So sellers, be careful. You can be assessed for tax that you should have collected, but you didn't. So again, the first thing that you always do when dealing with the sales tax issue is determine, do I have nexus in the jurisdictions where I'm selling into? And as I've said previously, we have now both the physical and the economic nexus test. So there's something called a nexus study that you'll want to go through. The nexus study, it needs to be pretty in-depth because if you're thinking about physical nexus, you have to think about, well, where were my salespeople running around 4 or 5 years ago? I need to have that documentation to determine, did I create a physical nexus back then, creating a liability for charging sales tax? Then you have to also now identify if you've exceeded the economic nexus thresholds. So there's a lot that goes into determining the locations where you have nexus. The next step, which seems counterintuitive, that you then look to, are my goods and services actually subject to sales tax in the jurisdictions that I'm selling into? You have to do this step afterwards because the nexus, remember that $100,000 threshold, most states say, we don't care if the goods or services that you're selling are subject to sales tax or not. We're just setting a flat $100,000 a threshold. So maybe you're selling only primarily services to customers in the state, but then you sell a little bit of tangible personal property. Well, you combine both the services and the tangible personal property together to determine that if you've exceeded that economic nexus threshold. So you do nexus first, then you determine taxability. When you're looking at your goods and services, this is a hard thing to do because you're looking at all the different states, looking at their laws and determining if what you're selling is subject to tax. It starts getting really messy when you're getting into the digital goods and services to determine if states subject those to tax. States want to, but many of them have really antiquated laws that haven't really caught up with digital economy. And so it's a bit of a challenge. You have to really dig deep to determine if what you're selling is subject to sales tax. Then there's all other kinds of challenges, even with services, sourcing the transaction. Where is your customer? Well, you should know that, but when your only contact with a customer is a shopping cart on a screen, you might get an address. Sometimes you get a zip code. Sometimes you really get nothing. So sourcing, knowing where your customer is to source the transaction can also be a challenge. The next thing you need to know is your customer actually exempt, blanketly exempt? If you're selling to governments or maybe nonprofit organizations, many states just blanketly exempt them from paying sales tax. Maybe the way that your customer is using the goods or services is going to be exempt. For example, maybe the customer is purchasing for resale and can give an exemption certificate. So then you know that you do not charge sales tax in that situation. So taxability is a challenge. Once you've determined that you have nexus and your goods are taxable in a jurisdiction, you need to register with the jurisdiction to collect the tax. If you have a prior liability where you weren't collecting the tax, but you had nexus, you're required to remit that tax to the jurisdiction. And there's a whole lot of process behind this where you can either do a voluntary disclosure where maybe you can get the penalties waived for remitting this tax. I always really like to work with the clients and say, hey, let's see what, let's go back to that taxability study. Can we determine that maybe your goods aren't subject to the tax? Or maybe we can go reach out to your customers and determine that they might be using the goods for an exempt purpose so that we can minimize the liability for those prior periods before we get you registered. Also, be very, very careful. This is something that you don't hear about a lot, but it's really important. By having Nexus, by registering to collect, you are now in the state system, and this can impact even other taxes, like business activity, gross receipts taxes, and income taxes even. So be very, very careful. This is not just limited to sales tax when you're registering to collect sales tax, because states have other taxes that you may get to pay as well. Okay, now you need to charge your customer. How do you determine the right sales tax rate? We have state rates, we have local rates, jurisdictions. It's challenging. You need to look up the rate of tax for where your customer is. There are tools out there where you can look it up manually online, but if you're selling more than maybe 30 transactions in a month into a state, you're going to need some extra tools. It's just too much to do manually. And Avalara has its fantastic AvaTax tool, rate tool. Others have some as well. You're probably going to need some help if you're doing any kind of volume. If your customers are exempt and giving you exemption certificates, you're going to need a way to manage that, because if Darcy, the state tax auditor, comes knocking on your door tomorrow and says, okay, show me all of your documentation for these transactions in our state where you did not charge sales tax, you're going to need to immediately provide copies of all of these certificates to prove why you didn't charge sales tax. And if you don't have those, you get to pay the sales tax. So exemption certificate management is very, very critical. Finally, you need to file the tax returns. You've collected the sales tax, you need to file the returns, and doing that usually monthly. So it's important that you have a good means to file the returns timely and accurately. There's lots of tools out there. Avalara has some. You can outsource it to CPAs or other people who can do it for you, but that's very, very critical. Then you might get notices of audits, and that's another thing you have to deal with when you are collecting sales tax. And finally, the last little blurb here on this slide is something that a lot of people aren't thinking about, so I just want to throw it out there. You as a business are buying things. This whole time we've been talking about selling goods and collecting sales tax, but you're also buying things. And when you buy things, if what you're buying should be subject to sales tax, but for some reason the seller did not charge you sales tax, maybe they didn't have Nexus, you are then required to self-accrue and remit the equivalent of the sales tax as a use tax. So here's one thing to think about. Businesses are generally pretty good about paying use tax. They understand the rules. But now think about this. With Wayfair and more sellers now being required to charge you sales tax, your use tax obligation should be decreasing because people are charging sales tax. So kick that out to your AP department. Say, hey, let's not be on autopilot here, just always accruing use tax for all the typical vendors, because vendors may flip the switch and start charging sales tax at any time. So it's important to watch your use tax as well. Okay, next. Here we go. Current issues for remote sellers and marketplace facilitators. Here's the meat of this. So today, this all is coming together. We have economic nexus. We have a marketplace out there. We have what we call remote sellers, sellers in locations where their customers are not located. And this creates a lot of sales tax issues. So let's dive into it. Number one, and as I go through this, there are so many different fact patterns, so many different jurisdictions with their own rules and laws. I'm just going to give a broad brush just to make you aware of some of the things that you need to be considering if you're out there selling on a marketplace or over the internet. Remember, 2018, June 21, 2018, 7:32 a.m. Pacific time. I remember the historic event when the Wayfair case was decided and issued. Big companies got going really quickly. The problem is small to mid remote sellers are still kind of struggling to grasp this whole economic nexus concept. And so we're talking with them every day. We have what I call the Nexus talk. It's not fun, it's not comfortable, but you have to do it. You have to understand Nexus. There is no option. You must comply and start charging sales tax. Otherwise, you can be held liable for it, and that's never any fun. You want to get it taken care of now before the taxing jurisdiction finds you, because if you can do it now yourself and remit the back taxes through a voluntary disclosure, you can have the penalties waived. So that's a good thing. If you are selling through a marketplace facilitator, we've talked about facilitators. We know Amazon is a marketplace facilitator for remote sellers, Etsy. Even Walmart has its own platform for third parties to sell through Walmart's platform. But again, a marketplace facilitator is generally defined by the states. Each state has its own definition, but something that advertises goods for a third party, takes orders, and accepts payment. So be thinking about this as you're selling. Are you selling through a marketplace facilitator? What about rideshare platforms, Uber, Lyft? Maybe they're a marketplace facilitator. What about food service deliveries? Maybe DoorDash or some of the others might be marketplace facilitators. What about selling used clothes over the internet? That's a big thing. Maybe they are marketplace facilitators and need to charge sales tax. What about an auction site? What about Craigslist? You just start thinking about all of this, and you really need to take a close look at it, because then you need to determine, okay, if I as the seller am utilizing this company, are they a marketplace facilitator? Are they required to charge the sales tax? Or if they're not a marketplace facilitator, then I need to evaluate my nexus in that jurisdiction, and I need to determine if I need to charge sales tax. So there's a lot of thought that needs to go into how you're conducting your business over the internet, and determining who's going to charge the sales tax. The next bullet point on here, I've kind of been skirting this the whole time, but we've got local taxing jurisdictions out there called home rule cities. And what these little boogers are cities within states that have their own independent sales tax imposition authority. And generally the states that allow these home rule cities to act on their own are in Colorado, Alaska, Louisiana. I didn't get Alabama on the slide, but there are several in Alabama as well. So these cities out there that impose their own sales taxes are looking at economic nexus saying, hey, this is a really good thing. And they are now wanting to also adopt economic nexus and require remote sellers to collect their own individual sales taxes. Okay, it's hard enough to, as a seller, to charge the sales tax for an entire state, but now you're dealing with a completely separate taxing jurisdiction at the city level. It's something you need to do. And Colorado's cities started just recently adopting economic nexus. So we need to be very cautious of that maybe you also need to register in some of these cities. The next bullet point, communicating taxability of goods and services. Okay, this gets us back to that old-fashioned telephone game, where you've got people lined up and you're trying to communicate what's going on. That's what we've got going on now. We've got a seller, we've got the marketplace facilitator, and we've got the customer. And we need to communicate from the customer that the customer's purchase is going to be exempt, but the customer is communicating through the facilitator back to the seller. And how do you do that? Well, here's an example of a scenario where that could get complicated. Say that you are the seller and you're a hair salon, and you go out and you want to buy shampoo. So you go look on a marketplace platform, maybe Amazon. You say, okay, I'm going to buy 20 bottles of shampoo, and I'm going to use 15 of those for my own purpose, washing hair at my salon. But I'm going to take 5 of those bottles and put them on the shelf and sell them. So now, within one page on the marketplace facilitator's website, if you just put in 20 bottles of shampoo, how do you communicate that 5 of those bottles of shampoo are actually for resale and not subject to sales tax, but the other 15 should be? That's a challenge in communicating this and getting the documentation from the customer through the facilitator back to the seller so that the seller has the exemption documentation. Again, this is all so new. It happened so quickly in 2019. States are still trying to figure it out. So it's an issue. We don't have a lot of good guidance. And then COVID landed on top of us. So I think the states are working on it, but just haven't had the opportunity to really think through, get good, clear communication on some of these issues out there to people yet. We talked about exemption certificates. The next one, what about undoing the transaction? What if you need to return those bottles? You try the bottle of shampoo. Oh, this is not good. I don't like this. I'm going to return it. Well, now how do we undo the transaction, getting the sales tax correct? Who undoes the sales tax? The facilitator collected it, but now the facilitator has to know about the returned goods. And so that's a big challenge as well. Also, watch out for bad debts. Maybe the customer ultimately doesn't pay, but the sales tax has been reported to the state. And so how do we take a deduction for this bad debt when the sales tax has already been reported? Who gets to take the deduction? That's an issue. Okay, next, seller payment discounts, another issue. And then marketplace reporting responsibility. If you're a seller, maybe you need to report those sales to the state, even though the marketplace facilitator is handling the sales tax, because the states want to know and reconcile, saying, okay, the facilitator's remitting the tax, but I want to make sure that the seller is reporting those same sales. So that's another challenge. Okay, I've got just a few more minutes here. I'm going to switch to the future issues and wrap it up for some questions. So looking forward into the crystal ball, what's going to happen in the future? Well, we know that states are needing money. COVID has wreaked havoc on the economy. States need money. And so what are they going to do? Well, I suspect those 3 states are going to, that have not yet passed marketplace facilitator laws, will do so: Kansas, Missouri, and Florida. We also strongly suspect that many of the states are going to pass laws in 2021 to assess sales tax on digital goods and services. So be watching for that if you're in the SaaS space, that more states are going to require you most likely to charge sales tax. Advertising has a big red target out there. Social media advertising, big dollars. States are trying to go after it and figure out how they can impose some kind of tax on that. The Internet Tax Freedom Act, this is something very interesting. Just throwing it out there. The concept is that if you are selling a service or good over the internet, and the equivalent good or service is not subject to sales tax if you were buying it not through the internet, this federal law preempts states from imposing a tax on the digital equivalent of something that otherwise would not be subject to sales tax. So an example would be, what if you go to Broadway, go see Hamilton? That's probably not subject to sales tax. But what if you download and stream Hamilton from your couch at home? Same thing, you're seeing the same actors, different form. Would the states try and subject the streaming to sales tax? Maybe. But then the Internet Tax Freedom Act, you might be able to argue, well, if I saw it on Broadway, it wouldn't be subject to tax, so it shouldn't be if I stream. Very interesting concept, lots of legal issues around that. Just wanted to throw it out there. In the prior slide, we talked about all the issues that are bubbling up. I think states are going to try and address some of those. But then the question is, are legislatures even going to be able to meet and actually get work done in early 2021? Are they still going to be somewhat hampered by COVID? So that's a bit of a concern. Finally, legal challenges. Is all this tax compliance just too complex? We were hoping right after Wayfair that maybe something might happen, but the thought is now, don't count on it. It is what it is. You need to comply with the sales tax. There really is no option. And so you need to get the tools out there to do your best in charging sales tax and getting it reported. And Avalara has fantastic tools for that. Okay, so that's it. Monica, how are we doing? What kind of questions do we have?
Hey there. Can you hear me now? Sorry about that.
I can.
So we've got some really good questions. Let me see here. We'll just kind of go through. And everybody, if we don't get to your question, have no fear. We are saving these and we will definitely have your account managers follow up with you. So the first one for you would be about marketplace facilitators. We're getting a lot of questions about who is a marketplace facilitator. So could you clarify for us if Amazon, Etsy, or eBay are considered marketplace facilitators?
I would say generally yes. For all the states that have imposed marketplace facilitator laws, that they passed those laws with Amazon, Etsy, and Walmart in mind. And so they crafted those laws and their own definitions of marketplace facilitator to cover what Amazon, Etsy, and Walmart are doing. So I would say generally yes. It's just when you get into some of these other facilitators that it gets a little bit more gray in terms of maybe a Grubhub or a DoorDash, et cetera. So you have to actually look at each state's law and maybe even reach out to the facilitator themselves and say, okay, what do you think about, are you a facilitator in this state or this state or this state? You have to look at the laws.
Gotcha. Perfect. Okay. And then we have a question from Andre. He says, excellent presentation. Thank you so much. Do you know of any marketplace facilitators or marketplaces that collect and remit all of the sales and or VAT taxes for their merchants?
Well, if the marketplace facilitator is operating or if the seller is delivering to a customer in a state using a marketplace facilitator and that state has adopted a marketplace facilitator law, then yes, the marketplace facilitator is responsible for collecting the sales tax on behalf of the seller and remitting it to the state. Perhaps for VAT as well. I'm not going to touch that one here.
All righty. Moving on, we've got a good question from Diana. If every one of your buyers are exempt as resellers, do you still have to register with a state and file a return even if it's $0 owed?
Okay, Diana, fantastic question. I'm a CPA. I must advise you on the law. The law says that if you exceed the economic nexus threshold of sales into a state, that you must register with the state, even though ultimately at the end of the day, none of your sales are subject to sales tax. So it is your own business decision, wink, wink, nod, nod, to consider whether you need to register with that state, knowing that none of your transactions are subject to sales tax. You have to be careful. There are weird states like Washington where there's the business and occupation tax that's intertwined with the sales tax and all reported together. So in Washington, you would still have a business and occupation tax on your wholesale transactions. You know, there probably are other considerations as well, but we have that conversation a lot with people. Maybe technically you need to register. Yes, that is the right answer. And file tax returns with $0 on them each month. That's the right thing to do. Is it a good business decision? We should chat.
All righty. We'll have just a couple more. Next one is from Stacy. It says, for Nexus and economic Nexus, what if all of the sales are non-taxable, but the value of those non-taxable sales is above the economic Nexus threshold value?
Stacy, good question as well. Yes, so if your goods are non-taxable, and I wish the states would have adopted a taxable dollar amount in setting their economic nexus thresholds. That would have made this so much easier, and getting back to Diana's question as well. I believe Nevada did. Nevada said, okay, the threshold is based upon taxable sales, $100,000 of taxable sales. Most other states say we are setting our threshold at $100,000 of any sales, which includes services, which include wholesale transactions. And so they're not giving you much leniency there.
Alrighty, and then last question comes from Patty. Again, if we didn't get to your question, we will follow up with you. We've got them all. Patty says, are there statutes of limitation on sales tax? How long am I liable for sales tax if I didn't charge it and find that I should have?
Patty, great question. Generally, if you are not registered with a state, most state, and each state is different, again, the general consultant answer, generally probably about 7 years, going back 7 years. But now you think, well, economic nexus only started in 2018, so that's kind of a good thing right now that we're only limited to economic nexus. Then you also have to check your physical nexus. And so generally 7 years, if you were registered but still not collecting, maybe 3 or 4 years. It can add up.
Alrighty, awesome. Well, that concludes the Q&A. So thank you so much, Darcy. Really appreciate your great presentation and taking us through some of these really great questions from the audience today. So now we'll move into the breakout sessions, and we'll see you all there.
Thanks.
I pass it back to you, Caitlin.
Thank you so much. And thanks everyone for those great questions. We're going to transition to our breakout sessions now. We have 2 for you to choose from. One is led by our senior product manager on best practices for filing a remittance. We're also going to do a demo of our new solution, Returns for Small Business. We got a lot of requests from customers to do a demo, so we're doing a short one in that breakout session. The other breakout session is led by our guest speaker, John Lawson. He's going to be talking about some best practices when utilizing social media marketplaces. In just a moment, the screen's going to prompt you to choose one or the other. No worries if you want to attend both. We'll be sending the recordings tomorrow. If we lose you for any technical reason and you want to rejoin, the links for all our breakout sessions were sent in today's reminder email. Speaking of reminders, if you want to save a copy of today's presentation slides, go ahead and click on that link now. The console will disappear at the end of streaming. Right after our breakout sessions, we have a short 15-minute speed trivia. You can meet other Avalara customers and meet your account managers face-to-face. Test your sales tax knowledge for a chance to win a $10 Hulu, Amazon, Jamba Juice, or Target gift card. Thank you again to Darcy and everyone on the line. I'll see you shortly.